the last couple of months, we've seen some pretty big increases here in prices from some of the best REITs. Now, as we can see here, for example, Agree Realty, one of my favorite triple net lease REITs, is moving from $56 all the way up to $72 since the start of 2024. Now, this begs the question, is this still good value today? And where should we be putting our capital? And where am I making my investments? And what am I looking at this point in time? Now, the short answer is it's not bad at this price. And in fact, if prices were to return to a 20 times price to AFFO ratio, we might still be looking at about 14% total annualized rate of return until the end of 2026. This looks like a reasonable estimate. We know that the analyst scorecard is mwah, it is perfect, 100% hits. And so I think there's a reasonable expectation there that we could see these adjusted funds from operation levels in 2026 and 2025. Over the last 6 months, the analysts following the company have been increasing their guidance for the AFFO, and we're continuing to see an expectation of increases as well in the dividends. Now, this 14% annualized rate of return is essentially a 4% dividend yield coupled with low single digit growth in the AFFO, fairly consistent but low. And most of this gain, therefore, is also being powered by the multiple expansion. Now, as we go higher, of course, it opens up more opportunity for downside, as well as the potential for it to go higher. Now, one of my big questions then is if Agree Realty isn't the value that it was sort of 5, 6 months ago, where should I be looking now and what should I be looking at in terms of investments? So let's have a look at some of the other real estate investment trusts. Now, Realty Income, similarly, we can see that big spike over the last while and taking this up to almost 15 times on a price to AFFO ratio. Now, on a normal price to AFFO ratio here, Realty Income looks like slightly better value. We have again a perfect scorecard of 100% hits, but a slightly higher total annualized rate of return, although the analyst expectations for the AFFO have been muted and in fact have been decreasing slightly over the last 6 months for the 2025 and 2026 years as well. We can see that the AFFO changes per annum are relatively minor. Again, low single digits coupled with a good dividend yield, but the most powerful point here would be a multiple expansion back to the normal AFFO ratio of about 18.5 times. So I would say Realty Income at this point hasn't seen that big jump that Agree Realty has. And so here, Realty Income would probably be on my watch list higher than Agree Realty. But what else is out there? Reit. Now, again, if we zoom in a little bit here, we can see that there's been a little bit of an increase, but again, less so than what we have seen with ADC. Now, the analyst scorecard is not as pristine here, but it's also not too bad. Switching over to the normal multiple trades are lower than the other two, and so we're looking at about 14-15% annualized rates of return here. We can see that the AFFO expectations for 25 and 26 financial year are more or less stable, and again, even lower AFFO growth expected here over those 2 years. Now, one of the good counterbalances here is we've also got a reasonable dividend yield to pull us up. What else is out there? Now, at WP Carey, in contrast to Agree Realty, in contrast to Realty Income, WP Carey also has a pristine analyst scorecard, in fact, with some beats over the 2-year forward. One of the challenges here is, well, I'm not, and I remain not fond of the divestment of the office properties. I'm not fond of how that was done, how it was communicated, and I'm not fond of the decrease in the dividend payout ratio, decrease in the dividends paid out, holding this estimated dividend payout ratio at a very healthy level, I think. I'm not a fan of how that happened, but if I was looking at this now and looking at this as a 14.5 times price to AFFO ratio, I think it could do better. I think it should be as very much as, even though it's listed as a diversified REIT, it's very much moving now into a more of an industrial REIT, particularly now that they've spun off that office space. So I think we could be looking at 16, maybe even 17 times price to AFFO ratio would be reasonable. And here, then, I think the total annualized rate of return could be as high as about 24% to the end of 2026. Now, there's a couple of provisos here. The AFFO estimates from the analysts have been weaker for 2025 and substantially weaker for 2026 and revised down over the last 6 months. Now, that itself is cause for a little bit of caution here. We can see the dividend yield of 6% is good, and that's definitely a contributing factor here, along with a very powerful bump in the multiple expansion if it can hit this level. And I think over the next several years as well, there's the opportunity there for the market to take another good look at WP Carey and begin to value it more as an industrially focused REIT. Another nice point with WP Carey is as well the geographic diversification and the ability to have the real estate also across Europe as well as the USA. And so I think that's also a really, really nice point here with WP Carey. Switching gears a little bit, Plymouth. Now, this is a very small REIT. It is a $1 billion REIT, and the analyst scorecard is not at all pristine. We also note that it doesn't have a very strong history either. But if we look at the dividend yield, it's 4%. It's not too bad. If we look at the normal multiple here of about 12 times, which I think it should be able to hit moving forward, we've got some good mid to high single digit AFFO growth. We've got improving expectations from analysts moving forward. It's sitting bang on this 12, 13 times price to AFFO ratio. Now, I think moving forward, we should see expansion probably at least up into 15, 15 and a half times. And so here, I think this would be a reasonably interesting pick, bearing in mind that there's more volatility here, but this could hit an annualized rate of return of about 18 to 19% per annum, and therefore could be one to keep an eye on. Now, also at about $23, it's possible as well, I would assume, to look at some options here, maybe selling some covered puts on this as well to try and improve the costs at which you could pick up the stock here. Now, what do you think? Are any of these on your watch list? What about Essential Properties Realty Trust? Now, this is one, again, that I absolutely love, but I'm feeling at the moment that it's probably a little bit richly valued, even though it does have strong single-digit growth rates, as well as improving analyst estimates for the adjusted funds from operations. But if it was to continue along this same trajectory, hitting about 18 and a half times price to AFFO ratio, looking here at about 13.7% total annualized rate of return, for me, this is very much a hold at the moment. If prices were to decline, I would take another very good look at this. So what do you think? Which of these real estate investment trusts are on your radar? Which of these are of interest to you at the moment? And which ones are you looking at making an investment into? Let me know in the comments down below. Do you have some other fantastic REITs on your watch list? And of course, there are many out there that you could be looking at. These are some of the ones that I've got my eye on at the moment and ones that I do watch very closely. Stay tuned as well for some more in-depth dives into some of these REITs in the near future. Stick around and I'll catch up with you soon.